Okay, here we go with this week's SoCal Multifamily Sales Pulse. In the news recently, these were the headlines. Do jobless claims show signs of a cooling labor market? Are commercial real estate price drops coming? Moderate bump expected for cap rates in the near term. Catastrophically bad inflation report is boosting chances of a 75 basis point interest rate hike next week. The U.S. will tumble into a recession as inflation soars, 70% of economists say. And here's some newscast reporting on the economy.
Cruel summer, record high gas prices.
8.6, a new cycle high, usurping March, which was 8.5. That was the highest since 1981.
Even this is coming in hotter than what a lot of people were expecting.
What has that done to your savings?
It's gone. It's depleted. No savings. That's it. If I can make it from 1 month to the other month, that's good.
Now a widow, she's relying on food banks for the first time.
Yes, most of the news is bad. I looked for news on the economy that was good, but I couldn't find much, if any. The federal government is dramatically and intentionally underreporting inflation. Let's take a look at the Bureau of Labor Statistics Consumer Price Index. Okay, this is from the U.S. Bureau of Labor Statistics website. This is the 12-month percentage change of the Consumer Price Index of selected categories. And here we're showing all items are at 8.6% increase over the last 12 months. Food is at a 10.1% increase. And if you've been shopping lately, I can tell this is way higher than 10.1%. Energy prices, which of course is gas, is 34.6% increase, and all major categories, less food and energy, is 6%. And if we look at the individual items on the inflation index, we have all items are 8.6%, but it starts off with food, and darn near every category in food is at a double digits, at 14.2% for meat, poultry, fish, and eggs. It's quite high. As you know, going to the grocery store has gotten a lot more expensive. The other items on here are energy, and this is, of course, includes gas, which is 48.7% increase, fuel oil 106.7%, electricity 12%, natural gas 30.2%, and then each item down below is other items like apparel, shelter 5.4%, and then also rent of a primary residence 5.2%. But I've seen articles showing that rent increases were up as high as 20% over the last 12 months. So some of this information is not at all accurate. It is all for nationwide, not just California in general. Okay, one of the other things I wanted to show or take a look at is the total consumer credit. We've had a recent spike in this consumer credit recently that is highest ever. You can see the chart where the usage has really increased over the last couple of months, and everybody is using their credit cards to either survive or pay for their necessities. And it's not a good sign that credit card debt has increased so much. And there's more indications that the party is over for real estate sales. Just 3 weeks ago, Orange County had 22 closed sales in 1 week. This past week, Orange County had just 4 closed sales. Remember, those are transactions that went into escrow 30 to 45 days ago. I don't recall any time when there was high inflation, supply chain issues, and high gas prices all at once. Add the war in Ukraine into the mix, and you have the makings of a sad outlook for the economy. For the pulse of the market, We're seeing more and more price reductions and properties coming back on the market after being under contract or pending. Buyers are backing out of deals, afraid to buy with the market having hit its peak. Inventory levels are increasing also. The market is at the beginning of a shift to a more balanced market, and buyers will soon have more leverage in the negotiations. When the market changes like it has currently, you need someone who does more than just take a listing and put the property in the MLS and wait for offers to come in. You need someone who has experience and someone who will do their homework on the market and market conditions prior to you listing your property. What to expect? The market and economy are changing. I expect the days on market to slowly increase and bidding wars to subside. I expect inventory levels to increase also. So far, multifamily values haven't been affected, but I expect that to change. No, I don't see values falling like they did in 2008, but I do see a slowdown in appreciation. If we do see values fall, I would think it would be more than 10%, or won't be more than 10%. But there are a lot of questions right now with interest rates, inflation, and unemployment, and how much each of those will affect values. It's too early to tell if values will fall at all or just up to 10%. Let me know what you think is going to happen. Post your comments at the bottom of this page. So that wraps up another week of the SoCal Multifamily Sales Pulse. You can look at all the closed sales, weekly stats, and monthly charts in detail in the full report on my website, MikeLembeck.com. And as always, feel free to give me a call or send me an email with any questions on the market. Many of the investors we work with stress about what to buy if they were to sell at the top of the market. So what we do is we find them off-market deals or alternative investments so they can achieve higher returns than they are currently receiving now. The way to increase your wealth is to sell at the current historically high prices and find alternative investments. And believe me, they're out there, where you can get as high or more passive returns and continue to increase your wealth. Markets are telling us they're due to lose their value in the next few months or years. Let me know if you'd like me to analyze your situation and property to help determine your equity position for a potential sale or 1031 exchange. All right, that's it for now. See you next week.